Hi everybody and welcome to this week's Dollar Index and Currency Market Commentary. You're speaking with Nick McDonald of Trade with Precision. Starting here on the monthly chart for the Dollar Index, and we can see how, very similar to what we've discussed the last few weeks, we've bounced down here off 7,500, we're pushing up. Now what I would have liked to have seen is in December so far, it's early days on the monthly chart, but I would have liked to have seen a continuation, a push up through there to really confirm the bullishness of the market, and that hasn't happened. In fact, we got a sell-off just in the last few days of last week, which has obviously created this bearish looking monthly candle so far as well. Now, what I would like to see is a break up through there, but as it stands right now, it's still looking very indecisive. That move up through that level around about 81.40 will make me switch to bullish again. However, at the moment it's indecisive because there's such a lack of a trend. The candlesticks are now not looking so strong with that down week last week. And equally, we don't have any clear sequence of higher highs and higher lows for an uptrend or lower highs and lower lows for a downtrend. That basic momentum, that basic charting momentum of a trend is by far, I think, the most important thing that you ever need to master in your trading. And that is really what I look for the direction I would like to trade with. And we just don't have it here. In fact, what we have is 3 equal lows to maybe slightly higher lows, but also 3 lower highs marked by these arrows on my charts. That shows me that on the monthly chart, there is no clear winner between buyers and sellers. Neither the bulls or the bears are clearly in charge. That makes it more indecisive on that monthly chart. However, just remember that level. We're looking at the last month's high. A break up through there will be looking very bullish. Now let's come down and see how this indecision translates across the charts, because if we come down to a weekly chart, if we just look at this most recent piece of price action, what we've actually got is a downtrend. We have made lower highs, we've made 3 lower highs now, and we've made lower lows. I identified this last week that this area here, as we pull back into previous support, becoming resistance and clustering perfectly with the 61.8% fib, identified that that was a key level. We broke up through it temporarily, and now notice how we've really strongly rejected that exact point. We failed to hold above it, we've rejected it, now we've closed down below there. This is looking like the early stages of our next lower high. So we've got a high up here, then a lower high, and this zone was a potential zone where if we were going to continue in the downtrend, it was likely to form a lower high. This candle is starting to look like that is happening. A breakdown through last week's low this week will be a confirmed lower high. That would mean we're looking for a pushback down and probably a retest of 76 to 7,500. So the weekly looking slightly bearish, the monthly, if anything, looking slightly bullish. We've still got indecision here across the time frames. Come down to the daily chart, and this is where we're going to get some significant indecision again, because what we've actually got here is higher highs and higher lows. We're now pulling back in, and we're thinking, will we continue to make a higher high here, or are we likely to go lower? One thing I always like to do is draw a Fibonacci line up. So I've drawn a Fibonacci retracement line from the most recent low up to the high, and note how we've just pulled back and we've actually closed hovering around that 61.8% fib. If price broke down through 78.6%, the 78-77 level, I would be looking for this to be a change of trend and a continuation lower. However, if we now turn around from here and we start to form green candles and breaking up through them, I'll be looking for the daily trend to continue. So what we have here is conflict. We have a weekly chart which looks like continuing down, but only if it breaks lower. We've got to see a breakdown through last week's low. Then we've also got a daily chart which looks like breaking up. How do we make any sense out of this? What we're actually looking for now is a confirmation from the candles on one of those charts. I would need to see in the early part of this week a green daily candle. If we've got a green daily candle and a break up through the high of that daily candle, then I would be looking bullish on the daily chart. And as far as a daily chart trend goes, I'll be willing to trade with that, even if there's a little bit of lack of confirmation on higher time frames. Equally though, if you imagine this daily chart doesn't give us that green candle and we break down, especially if we break down through 78, that's also going to be breaking down through last week's candle on the weekly chart, and that is going to be a double confirmation across both the daily and the weekly charts that we're looking like pushing down. My first target, by the way, for a move down would be, I'll be looking at the size of this last week's candle and taking that same distance here, so the distance between the low of last week and the high of last week, and projecting that down as our first target. And I think we're looking down around this kind of area here. If we can get down around this kind of zone, That's around about 77. I think we should be testing anywhere from 77 down to 75, provided we break down. If we get that green candle on the daily chart, then that will be a switch, and it will be more of a sign of a continuation back in the daily chart trend. Let's just have a quick look at a couple of spot currencies. Euro dollar, we'll see that is giving off very, very similar signals. So here in euro dollar, let's start from the top down. On the monthly chart, we actually started to look bearish last week with this big red monthly candle, but we need to see a breakdown through that monthly candle in order to continue and prove its bearishness. Then we have a weekly chart which is in an uptrend and having just had a nice pullback, looking very bullish there on those candles and bouncing off some support and coming down to a daily chart which is downtrending. Extremely similar, almost mirror image of the dollar index, and we really need to see some of the action this week, because I would like to see at least two of those time frames come back into agreement, whereby if we get the daily and the weekly both looking bullish or both looking bearish, then that's the positive sign we are looking for. Come in and I want to show you just a couple of currencies that are particularly strong, and that is the Aussie and the Kiwi. Now these currency pairs don't hold a big weighting at all in overall US dollar trading, and certainly not in the dollar index. However, what they do is they show a gauge of where the US dollar is going, because what we're looking at here is some of the strongest currency pairs. So just very quickly looking at these, what you'll see on the weekly chart for the Aussie is that AUD is looking very strong and really, really bullish, having pulled back into the buy zone and a big bullish up week last week, looking like continuing on and pushing up above parity again, being stronger than the US dollar. And equally, if we have a look at the Kiwi dollar, and you'll see that the Kiwi dollar here has pulled right back into old resistance, now becoming support, right back into the 7400 zone, pulled right back into there and had a really good strong bounce off it. Notice as well, right in that weekly chart buy zone based on the moving averages, pulled right back in, bounced right off resistance, and looking very, very strong again. How does this help? What is this showing us? It's showing us dollar weakness. So it's showing us that these trends look likely to continue on the Kiwi and the Aussie, and therefore that is dollar weakness. If we see this pattern hold and continue, then that is likely to filter through to the other currencies as well, whereby we're likely to see Euro strength and US dollar weakness, and equally therefore likely to see dollar index weakness. So if anything, I'm still a little bit cautious here. Like I say, I need to see a confirmation from the candles in the early part of this week. I've told you they're exactly what I'm looking for, but I am slanting slightly to the downside, where I'd be looking for the dollar index to be continuing down. I need to see that breakdown through last week's low around about 7,900. If it can break through there, I'm looking for somewhere down around 7,700 as a target for this week, with a move down to the downside, maybe even back towards 76 and 75 over the coming weeks. Happy trading all. I hope that is a help to your trading, and I look forward to speaking to you next Monday.